at the Cancorlia in Cancorlia, as this is the last sitting before the Christmas recess. I want to begin by wishing you and all the staff here in the Houses of the Oireachtas a very happy Christmas. All of the staff here, from the ushers to the Bills office, to the staff in the canteen and all the staff throughout the complex, do incredible work, and you all deserve our thanks, particularly in this challenging time. Can I also wish my colleagues here in the Dáil and the Irish people a very peaceful Christmas. While we must remain vigilant to the threat of COVID-19, to protect ourselves, to protect our families, to protect our community and each other, this Christmas does offer us and provide us with some relief and some comfort in what has been a very difficult year. So, nálaigh chunna di bhilík, agus aflíon fi washe di bhilík. Unfortunately, Christmas for some can be a time of much worry. Household debt is a real problem for many workers and families. And due to COVID-19, tens of thousands of people have lost their jobs, and many families are now facing the most difficult Christmas that they've faced in years. The choice facing many families are stark. How can I make this Christmas special for my family while at the same time paying the bills? Do I buy presents or do I heat the home? St Vincent de Paul has described this year's annual appeal as one of the most difficult in their 176-year history. Difficulties for some present opportunities for others, and there are always those who are ready to take advantage, provided that they can. This year, St Vincent de Paul and others have warned about the threat posed by licensed moneylenders this Christmas and the extortionate interest rates they charge. There are an estimated 330,000 customers of moneylenders in the state today, with an average loan of €556. For many in financial difficulties, moneylenders provide an easy line of credit, but at a very high cost. In the state, licensed moneylenders are permitted by the government to charge APR of 187%. That rises to 288% when permitted collection charges are included. The Citizens Information Board has said that this extortionate level of interest leaves many unable to pay for life's essentials, and they said it creates a vicious cycle of repeat borrowing. The majority of these borrowers are women. Many of them are lone parents. On the 6th of December in 2018, I introduced the Consumer Credit Amendment Bill. This legislation would introduce a statutory cap on the interest that moneylenders can charge. It is past second stage and will be considered in the Finance Committee next month in oral hearings as part of the next stage, and it has already received submissions from interested parties. Ireland is an outlier when it comes to the extortionate interest that these moneylenders are permitted to charge. Interest rate caps happen in 21 countries across the EU, including Germany, France and Italy. Many of these caps were introduced because their countries believed it was morally unjustifiable to charge ultra-high interest rates, especially against the most vulnerable and those least able to repay. Germany described them as lacking moral legitimacy. Finland described them as unconscionable. But in Ireland, anything goes. The sky is the limit. That is not acceptable. It shouldn't be tolerated. A statutory cap on interest rates that moneylenders can charge is supported by the Social Finance Foundation, the Citizens Information Board, MABS, the credit union movement, and by charities such as the St Vincent de Paul. So, Taoiseach, I'm asking you, can you commit to working with the opposition in relation to this legislation? Can we see a new dawn in relation to moneylenders and the interest rates they charge? We have legislation, as I said, that has passed a second stage of this House. It is before committee. It can definitely be approved on, and I'm open to suggestions. But it is something that needs to happen, and let's make sure that this is the last Christmas that moneylenders can charge up to 187%.
Thank you very much, Deputy. Taoiseach.
Thanks very much, Deputy. I think one of the things that I should mention is that there are low-cost loans in place, for example, through credit unions. And one of the things that I established as Minister for Social Protection was the It Makes Sense loan, which was a low-cost loan provided through credit unions, and people could pay that back often through the household budgeting service or through their weekly social welfare payment. I'm not sure if that still exists, but it was set up during my time as Minister, and it was set up with the express purpose of providing access to low-cost loans, particularly around Christmas time, to people who need them, who wouldn't normally get them from the banks or from elsewhere. In terms of the legislation that you've put forward, I haven't had a chance to speak to the Minister of Finance about that in a while. I'm not sure what approach he wants to take to it. I certainly don't have an objection to there being a cap on interest rates. What has been described as usury in the past, interest rates so high that they should be illegal. But I do know one thing we always have to consider when we pass any law is the law of unintended consequences. And while the possibility exists that you may pass a law with a view to capping interest rates, there is a risk that it may have the unintended consequence then of actually creating a new market and a bigger market for money lenders. And that's the kind of balance that we have to get right in any legislation like that.
Oireachtas, Deputy Doherty.
Yeah, thank you, Minister, for your comments in relation to supporting a cap on money lenders. And look, I acknowledge that Fianna Fáil supported the legislation at the time 2 years ago. Your own government didn't, but I do welcome your comments. Look, we need to deal with this issue, and there is, as I said, this legislation is under pre-legislative scrutiny in the Finance Bill and the Finance Committee. There is numerous submissions in now which actually address the issue that you raised, concerns we would all have in terms of would this open a market for illegal moneylenders, and it's very clear. I'll read from you from the UCC report, which is the expert in this area. There's no imperial evidence that interest rate restrictions result in an increase in illegal money lending. They draw the comparison in the UK where they stopped the payday loans that were exorbitant, and it didn't result in illegal money lending. And there is that avenue that still exists, as you acknowledged, in relation to the credit union movement. We need to put a bit of urgency and we need to put a bit of commitment behind this. So, as I said, as the sponsor of this legislation, I'm open to amendments. I'm open to looking at this being brought in on a tiered basis. But let's work together on this issue. Let's work collectively as a House to ensure that 2021 is the year that there will be an interest rate cap on moneylenders, that we will not accept that moneylenders can charge 187% APR on customers. And we know what happens at this time of year. They prey on the vulnerability. The pandemic has exposed that in a bigger way. And there is a duty on us as legislators to protect individuals from this type of activity from these lenders.
Thanks, Deputy. Like I say, I'll take it up with the Minister of Finance and see what his current thinking on it is. There may well not be evidence, but absence of evidence doesn't necessarily mean that it isn't happening. And as you know, money lending at extortionate rates that happens off books that's unofficial, inherently there won't be evidence unless somebody comes forward and says this is happening. But like I say, this is something that I have an open mind on. It may well be the right thing to do in 2021 to say that no lender can charge an interest rate above that, but we just need to bear in mind in doing that, if we decide to do that, that we may end up in the situation whereby in an attempt to put a stop to high interest rates in the official lending market, that we then create a new market for money lenders and make the situation worse. But I appreciate what you're saying. I appreciate your good intent on this and the evidence and advice you put forward.